There are two types of startups. The first one is the one we hear a lot about in the news, the one that grows very, very quickly and spread like wildfire. I think venture capitalist Peter Thiel explained it best when he said, "The biggest secret in venture capital is that the best investment in a successful fund equals or outperforms the rest of the fund combined." And these companies raise huge amount of cash and also get huge expectations on their performance. In finance, there's this theory called the capital market line. And the capital market line says that there is a straight relationship between risk and reward, like this. And investors who pick stock want to invest in stocks that have above normal returns. And this is called the alpha. So investors want to invest in assets above the line, not under it. And when investors say something like the best investment in a successful fund equals or outperforms the rest of the fund, Peter Thiel are talking about the extreme outliers in this spectra, companies that have huge return for their risk. So Peter Thiel asked that question when investing. Does this investment have the possibility of returning the whole fund? Peter Thiel invested $500,000 for a 10.2% investment in Facebook back in 2004, and the value of Facebook was 4.9 million, and now the value of Facebook is 416 billion. That's like 85,000 times the 2004 value. But that increase in value is a huge outlier in terms of reward. Entrepreneur and investor Gary Vaynerchuk talks about this.
One more time, I want to make sure I understand the question. During that time, you were told by people that you should let that first startup fail?
Yeah, because many people say that you should fail your first startup. So do you believe in that? And is it rare? Go hard.
Is it rare to what?
Rare to succeed with the first startup.
No, it's not rare at all. It's rare in Silicon Valley where everybody overvaluates companies and forces. VCs have a business model. It's called raise a fund, try to make a bet on 10, 20, 30 companies and push all of them very hard, because if one can actually get through, it will pay for all the others. But it doesn't care about the 29 sperm that didn't make it. So everybody gets the same advice because they're being selfish. One of the reasons I've pushed back very heavily on Silicon Valley culture over the last 5 years or so and stopped kind of investing the same way I did was I didn't want to, once I understood it, I'm like, wait a minute, this system sounds great at first. I don't think it's rare at all. I think there's a ton of small businesses that succeed on their first one, but I think they look a lot more like the guy here in the yellow shirt who says, I'm gonna take a 20-year perspective and not a 20-week perspective.
He said he stopped making these kind of investments because he says that this model is pushing too hard on the companies. And Gary's a guy who kind of likes to go thrift shopping on weekends and sell the stuff on eBay. So that type of startup is very different from the type of startup that Peter Thiel talks about. Are they even both startup? What is a startup even? This is one of the thought leaderships on startup, Steve Blank says.
A startup is a temporary organization designed to search for a scalable and repeatable business model.
So a startup is a temporary organization designed to search for a scalable and repeatable business model. I guess that an eBay seller, according to this definition, would be a startup until that person can do it repeatably and scalable over time. So this type of business, like going to a thrift shop and selling things on eBay, is basically like risk-free. If you don't account for, spending your own time as a cost. So you basically go to a thrift shop, look at things, check the price online for those particular things, and if the price online is above the price that you can buy it for, you buy it and sell it online. These are kind of the extremes. On the one side, you have these VC-backed companies that are supposed to return, the rest of the fund combined. And on the other side, you have Gary Vaynerchuk, who talks about things like selling stuff on eBay. While many businesses fall somewhere between these two polarities, I think the polarities themselves are important to have in mind when building a company. Where does it fall along these two extremes? If you like this video, please consider subscribing or giving a comment below. I would love to hear from you.